let's see how the market is responding. And market up quite a bit today, but I'm not yet optimistic until I start seeing higher highs and higher lows. We've been discussing this recently. And so we get this big pop in the Dow, up 674 points today. And look at NASDAQ, up 2.61%. Big rebound. But let me show you what I'm referring to by using the NASDAQ chart. We've been referencing this on the last couple videos we've done. So this is an example of a severe downtrend in lower lows and lower highs. Now this could be the beginning of a trend reversal here. And why is that important? I'm not a big technical analysis guy, but I do know that most of the hedge fund guys I talk to, that this is what they look for. So they're not going to come in and quote unquote buy the dip until they see a trend reversal to where you see this line. If we drew a line from here kind of coming down, how it would break through that and go, let's say it breaks through 18,000 and comes down a little bit and then starts to go up again, then they're buying. But they're waiting for it to break through that line of resistance, if you will. And once it does, then you're going to see some big money, some big players come into the market. But like we were saying earlier, or in earlier videos this week, that trend change has got to come from the passive bid, and that means retail. So we'll have to see if they play ball, and this could be just profit taking from a lot of the short sellers. And that's why you usually, when you see a downtrend in the market, even though it takes the elevator down, it's still kind of a bumpy ride here. But we'll have to watch this really closely going into next week and see if we can get over that 18,000 and get a bit of a trend reversal. And I would become much more bullish over the short term if that's how it plays out. Now, I'm just talking about the stock market. I'm not necessarily talking about the economic data. And let's take a look at bonds, up 4 basis points. So remember, we're still inverted because Fed funds is at 4.33. So the 2-year treasury yield at 4.32, yeah, it's getting close. But my guess is, once you kind of get up close to the 4.33 level, it's going to start trending down again. Let's look at a chart there and see what it looks like. Yeah, so very similar. And we'll have to see if, although keep in mind yields have an inverse relationship to the price. So it goes down. We'll have to see if it really goes above that 4.33 level. And if it does significantly, then maybe we're going to have another slight move up in yields. But that would not be my base case. I mean, when you have yields go from 4.8 all the way down to 4.18, that is a lot of buying. I mean, they're like overbought, if you will. And it makes sense that they kind of take a breather. Let's look at gold. I mean, that all-time highs, like we said yesterday, really an incredible move. And it's funny, Josh pointed out to me today that one of the model portfolios I have for Rebel Capital's Pro, and this is actually the conservative model portfolio that is just gold and T-bills. And then Josh has just been rolling the T-bills for me once every 3 months or whatever it is. And it's up like, I don't know, 10 or 12%. And he thought it would be fun just to compare that to the NASDAQ over the last 12 months. So actually, now that I say that, I'm kind of curious. We'll get into gold in a second. I'm sure the NASDAQ has to be beating me on that portfolio. But it's not necessarily just that the NASDAQ's beating me. It's more so risk reward. It's more so the risk adjusted return. And with gold and T-bills, I mean, what's your downside on that versus Nvidia or the NASDAQ? So if we go back, let's do a 1-year chart. So 1 year we were, let's just say 16,000 for easy math. So it's up, let's say 17 what is it, 16,000. So we're up 1,700 roughly. So 1,700. And I know you guys are probably like, George, get on with the video, but I'm actually really curious here. Just bear with me for a moment. So we've got, let's see. So it's up 1,700 divided by 1,600. Yeah. So, I mean, yeah, right around 10%. So risk adjusted, I'm taking the gold and T-bills all day long over a wildly overpriced NASDAQ. But we'll have to see how it plays out. You know, I shouldn't sit here and toot my horn, because the next thing you know, I'm sure the NASDAQ is going to rip to like 25,000 in the next 2 weeks and leave me in the dust. All right, let's get back to gold. So, yeah, boy, getting close to 3,000. And the chart on silver probably looks even better. And this is the one thing that has me kind of second guessing a recession, because, you know, silver, Dr. Copper at 4.88. I mean, if that was really going down with gold, then the probabilities for me that we're right on the doorstep of a recession would be a lot higher. But you know, I have to pay close attention to Dr. Copper. Well, this isn't at an old. So the chart for gold actually looks better than the chart for silver, if we're just comparing technicals.
Hey guys, I'd like to personally invite each and every one of you to attend this year's Rebel Capitalist Live. This is the incredible conference I put on annually that helps you build a bulletproof portfolio. It helps you increase your personal freedom and liberty, and also it helps you increase the size of your network. In other words, you get to meet a lot of like-minded individuals, fellow Rebel Capitalists. It's in Orlando, May 23rd through the 25th. Past speakers have included people like Robert Kiyosaki, Ron Paul, Peter Schiff, Mike Maloney, Lynn Alden, just to name a few. So to get your tickets ASAP and to find out who is speaking at this year's Rebel Capitalist Live, you can check it out at rebelcapitalistlive.com. And just a little quick insider information, if you get your tickets sooner than later, you can get a discount, because as we get closer and closer to the event, the tickets go up in price. So don't wait. Go to rebelcapitalistlive.com right now and get your tickets, and I will see you in Orlando, May 23rd through the 25th.